Bitcoin has experienced a significant price decline, dropping nearly 50% from its all-time high of over $126,000 in October 2025 to around $67,000 as of February 18, 2026, driven by macroeconomic pressures, institutional outflows, and leverage unwinds. Research suggests the downturn may continue in the short term, with potential support at $60,000, but risks of dipping to $50,000 or lower amid ongoing risk-off sentiment and stalled crypto-friendly policies. Evidence leans toward caution for new investments now, as volatility remains high and recovery may not occur until liquidity improves later in 2026. However, long-term holders could benefit if institutional adoption resumes. Understanding the current Bitcoin crash. Bitcoin's price has been on a roller coaster, but the recent drop feels particularly sharp. It seems likely that a combination of global economic factors and market dynamics are at play, pushing the price down from its peak. According to Yahoo Finance, Bitcoin closed at $67,108.40 on February 18, 2026, after starting the day at $67,173.45, reflecting ongoing pressure, according to Yahoo Finance's historical data. This decline mirrors broader risk aversion in financial markets, where investors are pulling back from volatile assets. Diving deeper, one major factor is the shift in monetary policy expectations. The nomination of Kevin Warsh as the next Federal Reserve Chair has introduced hawkish signals, suggesting higher interest rates for longer, which strengthens the US dollar and makes riskier assets like Bitcoin less appealing. As reported by Investing.com, this nomination weighed heavily on risk assets, contributing to Bitcoin's fall. According to Investing.com's analysis on reasons for Bitcoin's decline, geopolitical uncertainties, such as escalating tensions between the US and Iran or new tariffs on Chinese imports announced by President Trump, have further fueled a risk-off environment. CNN Business notes that these fears have led traders to sell rather than buy during uncertainty, exacerbating the drop, according to CNN Business's report on Bitcoin's behavior. Another key element is the unwind of leveraged positions. Over-leveraged traders betting on continued upside faced massive liquidations, over $5.4 billion in a 72-hour window, as per Al Jazeera's coverage. This cascade effect amplified the price drop, turning a correction into a crash, according to Al Jazeera's explanation of the crypto winter. Institutional outflows from Bitcoin ETFs have compounded this, with more than $7 billion withdrawn in November alone, reversing earlier inflows and signaling waning confidence, as detailed by CNBC, according to CNBC's article on ETF flows and crypto winter fears. Potential for further declines. It appears there could be more downside ahead based on technical and fundamental indicators. Analysts from Daily Forex point to support at $65,000 in the short term, but a break below that could target $60,000, a level seen as critical, according to Daily Forex's BTC USD forecast for February 18, 2026. If this holds, it might signal the start of a bottoming process. However, persistent outflows and macro headwinds could push it lower. Bloomberg's Mike McGlone warns of a potential implosion to $10,000, citing surging stock markets with low volatility and lost faith in pro-crypto policies, according to Bloomberg Intelligence's strategist warning. Historical patterns offer some insight. The Motley Fool highlights that Bitcoin's 4-year cycle often sees prolonged declines after peaks, with the current drop resembling past corrections but potentially shortened by institutional factors, according to the Motley Fool's analysis on Bitcoin's decline. X posts from users like Linton Worm echo this, predicting a hard crash in 2026 due to macro uncertainty and cooling ETF flows, according to an X post by Linton Worm. Yet, not all views are bearish. Some suggest the worst may be over as forced liquidations moderate, per Seeking Alpha, according to Seeking Alpha's article on Bitcoin's liquidations pointing to recovery. Is now a good time to invest? The evidence leans toward approaching with caution, as the market shows signs of complexity and potential for further volatility. For those with a high risk tolerance, buying now could position for a rebound if liquidity improves, but it's not without risks. Charles Schwab advises viewing digital currencies as speculative, with additional risks like high volatility, according to Charles Schwab's guide on what investors should know about cryptocurrency. Financial advisors cited by CNBC recommend small allocations, 1% to 5%, for those with strong foundations, emphasizing Bitcoin's long-term store of value potential despite short-term pain, according to CNBC's expert opinions on holding Bitcoin amid sell-offs. On the flip side, history shows recoveries follow crashes, and current on-chain accumulation by mid-sized wallets suggests some are buying the dip, as noted by Forbes, according to Forbes's take on the 2026 sell-off. If you're targeting the USA audience, consider that regulatory clarity, like the Stalled Clarity Act, could sway sentiment. Market Pulse reports this as a factor hinting at drops towards $60,000, according to Market Pulse's analysis on Bitcoin's battle. Ultimately, research suggests hedging bets, perhaps using dollar-cost averaging, rather than all-in moves, given the uncertainty. Hello, everyone, and welcome back to Joseph Markets, your go-to channel for insightful finance discussions powered by cutting-edge AI analysis. If you're new here, I'm Joseph, and today we're diving deep into one of the hottest topics in the crypto world: why Bitcoin is crashing, what the future holds for its price, and whether it's a smart move to invest right now. Before we get started, if you want 100% true news and correct advice on finance and crypto, hit that like button, subscribe to the channel, and drop a comment below saying Joseph Markets to join our community of savvy investors. Your engagement helps us bring more high-quality content like this. All right, let's jump in with something that'll grab your attention right away. Imagine waking up to find that your investment in the world's most famous cryptocurrency has been cut in half in just a few months. That's the reality for many Bitcoin holders right now. From soaring past $126,000 in October 2025 to hovering around $67,000 today, February 18, 2026, Bitcoin has shed nearly 50% of its value, wiping out trillions from the market. But why is this happening? Is it just a blip or the start of something worse? And most importantly, should you buy in now or steer clear? Stick around, because by the end of this video, you'll have a clear, evidence-based perspective to make your own decision. We'll break it all down step by step, with real data from trusted sources, so you can feel confident in understanding this volatile market. First off, let's set the stage with the current state of Bitcoin. As of today, Bitcoin's price is sitting at approximately $67,341, down from yesterday's close of $68,880, according to Latestly's daily price update. This isn't just a minor dip. It's part of a broader trend where Bitcoin has lost over 45% since its all-time high last year. To put that in perspective, if you invested $10,000 at the peak, it'd be worth about $5,300 now. Shocking, right? But this kind of volatility isn't new to crypto veterans. What makes this crash different is how it's tied to bigger economic forces, not just hype or speculation. So, point 1. The macroeconomic pressures fueling the drop. Global uncertainty is playing a huge role here. Geopolitical tensions, like the escalating issues between the US and Iran, combined with President Trump's announcement of 100% tariffs on Chinese imports, have spooked investors worldwide. According to Forbes, this geopolitical shock turned a potential correction into a full-blown massacre as markets reacted to the fear of trade wars and instability, according to Forbes's article on why the 1010 crypto crash still haunts Bitcoin. When fear grips the market, people flock to safe havens like gold, which has surged 24% since October, while Bitcoin has plummeted 50%. This divergence challenges the idea of Bitcoin as digital gold, as noted by CNN Business, where risk-off sentiment has led traders to sell rather than buy during uncertain times, according to CNN Business's report on what's going on with Bitcoin. Adding to this, monetary policy shifts are hammering risk assets. The nomination of Kevin Warsh as the next Federal Reserve Chair has been a game-changer. Warsh is known for his hawkish views, favoring higher interest rates and a smaller Fed balance sheet, which strengthens the US dollar and makes borrowing more expensive. As per Al Jazeera, this has created a vicious circle of downward spirals in crypto prices, according to Al Jazeera's piece on why Bitcoin is crashing despite Trump's support. Investors who were betting on easy money and rate cuts are now recalibrating, leading to a sell-off in volatile assets like Bitcoin. Deutsche Bank analysts echoed this in a note, attributing the drop to hawkish Fed signals and institutional outflows, according to Deutsche Bank's note on Bitcoin's price hitting its lowest since Trump took office. Now, point 2. The role of institutional money and ETF flows. One of the biggest shifts in this cycle is how institutions have entered the game, but they're not the diamond-handed holders we might think. CNBC reports that Bitcoin ETFs haven't taken off as expected, with institutional investment declining and outflows reaching $678 million in February alone, according to CNBC's coverage on the Bitcoin price crash and ETF flows. This is a stark reversal from the inflows that drove the 2025 rally. DeFi Llama data shows a $6 billion sell-off since November, as per Yahoo Finance, according to Yahoo Finance's news on Bitcoin's price fall to $10,000 warning. When big players like pension funds and family offices reduce exposure during risk-off periods, it creates massive selling pressure. Ex-user UragankX highlighted this on Polymarket, where bets on Bitcoin dropping to $55,000 are at 37%, reflecting fears of deeper declines amid ETF outflows, according to an X post by UragankX on Polymarket's Bitcoin price market. This institutional behavior ties into point 3, leverage and liquidation cascades. Crypto markets are riddled with borrowed money, and when prices slip, it triggers automatic sell-offs. Over $19 billion in leveraged positions were wiped out on October 10, 2025, alone, according to Forbes, setting off a chain reaction that's still echoing, according to Forbes's explanation of the 1010 crash. In recent weeks, liquidations have hit $5.4 billion in just 72 hours, as per YouTube channel analyses like Why is Bitcoin Falling? 2026 Crash Explained, according to a YouTube video on the 2026 Bitcoin crash. This isn't organic selling, it's forced, amplifying drops in thin weekend liquidity. As CME Group points out, Bitcoin's problems include a stagnant user network since 2017 and reliance on trading volumes that precede bull and bear markets, according to CME Group's insights on crypto breaking free from Bitcoin's undertow. Moving to point 4, the breakdown of traditional narratives. Bitcoin was supposed to thrive under a pro-crypto administration, but stalled legislation like the Clarity Act has dashed hopes. Market Pulse notes that geopolitics, regulation, and bearish technicals hint at further downside to $60,000, according to Market Pulse's report on Bitcoin's 70KK wall. Trump's support hasn't materialized into the boosterism expected, leading to lost faith, as Bloomberg's Mike McGlone warns of a bubble imploding, according to Bloomberg's analyst on Bitcoin's price falling to $10,000. Even corporate treasuries, once bullish on Bitcoin, might dump holdings if earnings weaken, per Reddit discussions on r/tar cryptocurrency, according to a Reddit post on why 2026 could be the most brutal crypto collapse. Now let's address the big question. Is there a possibility of Bitcoin going down further? Absolutely, based on current trends. Technical forecasts from CoinMarketCap show Bitcoin's historical data pointing to potential lows if $60,000 breaks, according to CoinMarketCap's Bitcoin price history. Polymarket odds suggest a 16% chance of $50,000 by month's end, amid ongoing crashes, according to Polymarket data cited in an X post. Analysts like those from VanEck describe this as orderly deleveraging, but if macro stress persists, $50,000 isn't out of the question, according to VanEck's blog on what triggered Bitcoin's major sell-off in February 2026. Ex-user AirYieldX notes, Bitcoin rebound hype fading as range highs crumble, with volatility tied to lack of fresh capital, according to an X post by AirYieldX on Bitcoin's volatility. However, not all signals are doom and gloom. Point 5. Signs of potential bottoming. On-chain data from Forbes shows broad accumulation across wallets, especially 10 to 100 BTC holders buying near $60,000, according to Forbes's take on the 2026 sell-off. This suggests smart money is stepping in, viewing the dip as a buying opportunity. Seeking alpha points to shrinking forced liquidations as a sign the worst may be over, according to Seeking Alpha's article on Bitcoin's liquidations pointing to recovery. If $60,000 holds, It could kickstart a recovery as per Daily Forex, according to Daily Forex's forecast. Looking ahead to point 6, future price predictions for 2026 and beyond. Opinions vary widely, reflecting the market's uncertainty. Kraken's tool forecasts Bitcoin at $7,962 by year-end, with a 5% growth rate, according to Kraken's Bitcoin price prediction. More bullish views from Binance see it at $86,525 by 2031, but short-term consolidation dominates, according to Binance's yearly forecast. CNBC aggregates expert predictions ranging from $75,000 to $225,000 for 2026, with CoinShares at $120,000 or $170,000, according to CNBC's Bitcoin price predictions for 2026. Changelly expects a minimum of $130,516 in 2026, according to Changelly's Bitcoin price prediction. Yet, bearish scenarios from the Motley Fool warn of months before a cyclical low, according to the Motley Fool's history-based answer. Ex-user Ain Bitmonk Crypto argues the 4-year cycle is evolving into a liquidity-driven supercycle with higher floors but slower gains, according to an ex-post by R. Bitmonk Crypto on Bitcoin's changing cycle. Bitwise predicts Bitcoin breaking the cycle for new highs if the Clarity Act passes, according to Bitwise's 10 crypto predictions for 2026. Goldman Sachs sees 2026 as strong with rate cuts and better regulations, according to Goldman Sachs's 2026 crypto forecast. Point 7. Weighing the pros and cons of investing now. On the pro side, if you believe in Bitcoin's long-term role as a store of value, now could be a discounted entry. River Financial notes that with over a decade of survival and fiat currencies struggling, Bitcoin likely has a future, according to River Financial's guide on buying Bitcoin now. History offers hope. The Motley Fool points out recoveries after 50% declines, according to the Motley Fool's prediction on Bitcoin hitting $100,000 in 2026. Strategies like dollar-cost averaging mitigate timing risks, as suggested in YouTube analyses, according to a YouTube video on the Bitcoin sell-off no one is explaining. But cons are significant. Volatility is a feature per CNBC advisors, and Bitcoin remains vulnerable to broader trends, according to CNBC's advice on holding amid sell-offs. Morningstar UK notes European ETF investors aren't scared yet, but outflows could resume, according to Morningstar UK's article on Bitcoin's sell-off and ETF investors. If rates stay high or geopolitics worsen, more pain could come, as warned by Reddit users predicting a brutal 2026, according to a Reddit post on the next bear market. Forbes Advisor lists top cryptos, but emphasizes fractional investing due to high costs, according to Forbes Advisor's top 10 cryptocurrencies of February 17, 2026. Point 8. Balanced investment strategies. If you're considering dipping in, start small. Charles Schwab recommends evaluating suitability based on risk tolerance, according to Charles Schwab's Investor Guide. Quora discussions suggest 2026 could be good long-term due to adoption, but only with DYOR, according to Quora's thread on investing in crypto in 2026. Ex-user Olajohnly208 describes this as a structural adjustment, prioritizing utility over hype, according to an ex-post by R. Olajohnly208 on Bitcoin's retrace. Avoid leverage. Focus on core holdings like BTC for stability, as per Al Bitmonk Crypto, according to an ex-post by Al Bitmonk Crypto. Finally, point 9. My take on the road ahead. Research suggests the crash is a reset, not the end. With on-chain accumulation and potential policy tailwinds, recovery seems likely later in 2026, but short-term risks remain. If you're in for the long haul, now might offer value. Otherwise, wait for stability. According to OSL's forecast, median predictions hit $2 and $1,000 by 2030, according to OSL's Bitcoin price prediction for 2026-2040. Point 10. Wrapping up with action steps. Review your portfolio. Ensure crypto is a small part. Monitor Fed decisions, ETF flows, and technical levels like $60,000. And remember, this is education, not advice. Consult professionals. Thanks for watching, folks. If this helped, like, subscribe, and comment Joseph Markets below for more. See you next time.